Adobe's acquisition of Figma was abandoned by both companies this week. And I think this was ultimately a really big deal for both the startup community, lost a potential $20 billion acquisition. And then also, this is a big blow to Adobe. It's no secret that the company is not a leader in this connected cloud, in this collaborative space that Figma is building out. And I think the ultimate risk is that Adobe's products become a tool in somebody else's platform. So that's what I want to dig into today, is not only the strategic position, but also the financial position that Adobe finds itself in, because the growth of the tools that it's been using may actually be hindered by the loss of this acquisition. My name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. And I'm going to just go to a couple of news articles that just tell exactly what happened. This is from The Verge, just pointing out that there was pressure from regulators to call off the acquisition of Figma. And that's ultimately what happened. So the UK and EU were really leading this, and they've been against a lot of the acquisitions in big tech, really don't want these companies getting too big and want more competition. We can debate that. We can debate the truth of that endlessly, but that's exactly what's going to happen. And then Adobe is going to have to pay a reverse termination fee of $1 billion in cash. So that was part of the acquisition, basically saying, we know there's regulatory risks, and if we can't actually complete this deal, we're going to pay you $1 billion. Regulators cited Adobe's near monopoly in design software and said by purchasing Figma, this would extend that monopoly position into a lot of the tools that not only are used by designers, but also developers and all kinds of other people in the design world and adjacent to the design world. What Adobe was really trying to do is move into a position to be that platform company where a lot of people are working together. So a platform would not only have the people operating in a piece of software like Figma, that's exactly what the software is built for, but then also have plugins and tools that people can use to insert assets into Figma. So if you're doing a design project, you may go off and use Photoshop or Illustrator and then bring it into Figma. Well, eventually, I think a lot of these tools are just going to be plugged in. And the risk for Adobe is that if you're just a plugin for somebody else's tool, then you can just be replaced by somebody else. Why wouldn't you use Canva instead of you using Photoshop? Canva is much more cost effective, and maybe you don't need all the tools that Photoshop has. So I think that's ultimately the risk, is instead of being the core piece of software that most designers are using and has really become ubiquitous across the industry, you get replaced. And Figma is the piece of software that you have to know if you're going to be a designer or a developer or a product manager in software or a website developer. So Adobe might be kind of losing hold of that valuable position. And it's a very valuable position to its finances. Here is a look at Adobe's revenue from digital media and digital experiences. And you can see that both of these have just been on an absolute tear over the past decade. This little dip that you see earlier in the decade was when the company moved to a SaaS model instead of just being able to buy a piece of software for a few $100s and then being able to use it forever. They moved to a software as a service model where now you have to pay a monthly or a yearly fee to use these pieces of software. And when you do that, you start to be able to bundle things together. And that's really where you start to see the expansion in revenue. Not only is revenue expanding, but margins are expanding at the same time. This is a look at Adobe's revenue, which is up nearly 5x over the last decade, and net income. And you can see that net income, company was almost break even in 2014, and that's jumped all the way to net income of $5.5 billion in the past year. So just tremendous results and momentum for the company. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. And the challenge is, how do you keep that going? You got to increase the number of seats. You have to increase the price that you're charging for all those seats. There are some interesting things that Adobe has done in 2023, really led by some of the artificial intelligence work that they've done. I've done videos on this in the past, but products like Firefly, I think, are a really interesting use case for Adobe's tools, for Adobe to be able to make that content creation even easier for creators. Whether you're working on an image or a video, Adobe is really leaning into artificial intelligence and the way that they've built their models with content where they know what the assets that they're training on. They've been able to say, hey, we at least know we own the commercial rights, which you might not for some of the other AI models. But as a stock, and that's the lens with which I want to look at Adobe today, I think there's a lot of challenges ahead. Looking at the company's valuation, price to sales on a trailing 12-month basis is 14.2, on a next 12-month basis is 12.8. So that's just an incredibly high enterprise value to sales multiple. The earnings multiple gets even bigger, 52 on a trailing 12-month basis, and the price to earnings multiple on a next 12-month basis is 34. So extremely expensive stock. So that has a lot of growth priced in. And this is where the acquisition of Figma, I think, really fit with the company. You need to keep growing. You need to expand the product line and be able to expand both the user base and the amount all those users are paying. Well, with Figma, you can do that. You can move into not just being used by designers, but then also being used by web developers and programmers. It's a communication tool where you have multiple people who need to have subscriptions to access it. It's a really great way to expand the pie for Adobe. But now they're not going to have the ability to do that. And now they're just going to have to plug into something like Figma, which seems like it has become the industry standard. And I think that's ultimately going to be the challenge, is how do you grow in this business when you're already the dominant player in an industry and now everybody's just trying to come after you? I mentioned Canva earlier. That is an incredibly successful product. It's incredibly easy to use. It's what I use all the time to make images and videos, partly because I don't know how to use the Adobe Photoshop, and I'm not willing to go up that learning curve to be able to learn those products when I can use something very simple like Canva. Same thing goes with this cross collaboration tools. If the industry is moving towards Figma being the place that all this cross collaboration happens, it's going to be difficult for Adobe to build their own product. They've actually tried to do that, and it hasn't been very successful. So this is fundamentally a really challenging time from a strategic position because Figma aimed to fix a lot of that. It was a up and coming product, very high growth, kind of in that cool club from a software perspective, which I don't think Photoshop or Illustrator is these days. But now that's not going to be folded into Adobe's products, and the company's going to have to rethink where it's going. And from an investment perspective, investors are paying a very, very high multiple for a company that I'm not sure how many levers they're going to have to increase that revenue in the future. The other thing I'll add is I think this puts into question what Adobe can even acquire at this point. If they tried to acquire Canva, could they even do that? I don't know that that's the case, especially considering all the regulators that they're dealing with around the world. It's not just the US, it's the EU, it's the UK. So there's multiple veto points. And I think in this digital space, especially when artificial intelligence is getting easier and easier to use, there are dozens of apps that are doing incredibly interesting things with artificial intelligence that are much lower cost than Adobe is charging today. So this may be the kind of company that faces a lot of disruption over the next decade from artificial intelligence and from collaborative tools like Figma and Canva. That's why the company wanted to get this acquisition done, but that's not going to be happening. I think ultimately that's going to be bad news for Adobe. Don't know where the stock goes from here, but it's not one that I'm buying considering the incredibly high price to sales and price to earnings multiples and the potential that that growth slows down in the next few years. So what do you think about Adobe and its position? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next.